we're about to see what were considered third world countries and communist countries rise, because these governments are allowing their people access to returns that they're not conceivable in this paradigm. And that's why even when you speak to an average a trader or a financial planner, a fiduciary, an attorney, especially if they've been at it for 20, 30 plus years, they'll always tell you, oh, that's a scam. It's not possible. Nelson, I can assure you, I've been doing this for a lifetime. I would have known about it by now. Someone would have taught me. My college, my professors, whatever. I'm licensed. You probably don't know that, but I'm licensed. None of that matters in this new world.
So here's the big question. How do everyday people like us who didn't grow up wealthy and were not taught how to be wealthy in school, how are we supposed to learn to think, invest, and grow wealth like the top 1% without compromising our ethics and our values? My name is Jeremy Whaley. That was my big question. This podcast will give you the answers. You're listening to Think Rich Radio. Welcome, everybody, back to another episode of Think Rich Radio. I'm your host, Jeremy Whaley, coming to you almost live from Nashville, Tennessee. I got my co-host, Mr. Nelson Bran, coming to you from just north of Austin, Texas, in a little town. Where is it? Germantown?
Georgetown,
Texas. How many people live in Georgetown, Texas?
There's 6 of us.
There's 6 of you. Do you have a traffic light?
No, we get back and forth on donkey is what happens here.
Okay. So it's great to be with everybody. Nelson, today I want to get into a really hot topic. It's real world assets and specifically tokenization. And one of my students tonight in one of our group coaching sessions that we do over at Trade Maestro, which if you guys haven't checked us out at trademaestro.com. Check out Nelson and what they're doing over at deltachainlabs.com. There's my big plug. And like and subscribe if you haven't done that. Back to our story. One of my students said, Jeremy, how would you explain tokenization? And I realized, you know what? There's so many people, they have no idea. We throw these words around, we know what they mean, but there's a lot of people that don't have an idea. So there's 2 things I want to talk about in this episode. Number 1, I want to talk about RWAs and tokenization. And then I want you to share with our audience what you found in Paris. You were just there on a really big trip, and you came back telling me some incredible stories about what's emerging in third world countries in Africa, throughout Asia. And I want to have that conversation. So are you ready for that?
I am. Let's do it.
Awesome. I kind of teed it up. So let's start with definitions. Let's just start with what is tokenization? Let's start with that right there. What is tokenization in your definition? How would you describe it?
Tokenization is bringing something material, creating a cryptocurrency for it, and selling it on the open market so that the average person can buy into, say, a franchise of sandwiches, a coffee shop, say a building that's mixed use with commercial on the bottom and condominiums on top, say gold. It can be applicable to anything that's physical. It could be the mass manufacturing of tabletops. It could be a service that's provided. It could be for an existing debt. What you're doing is you're fragmenting a very big concept or a big idea so that everyone and anyone can participate. Ideally, the cryptocurrency, the coin, the representation, the small representation of that larger physical whole is something so that anyone can buy into, be it at $1, be it at $10, be it at $100, whatever it is. And sometimes if it's done correctly, there's a good, better, best of the purchase of that particular cryptocurrency, depending on what kind of return that person is anticipating, be it daily, be it weekly, be it monthly. So you're tokenizing a service or a physical commodity into something that's investable by everyone.
Okay, so you mixed a lot there. Let's compartmentalize some of those things. Everything you just described is what we would lump into an RWA. RWA is an acronym for real world asset. So whether it's gold, whether it's real estate, whether it's an oil rig in Texas, or fill in the blank, all of those are real world assets, But what you described is a blockchain concept, which is not real world, that's digital. And so the mechanism that we use for that is what we would often refer to today as a cryptocurrency, but it's really the tokenization. It's turning those real world assets into something that can be bought and sold on the blockchain, like a Bitcoin, like an Ethereum. Would you add anything to that?
I am going to add to that. So there's a particular project that you and I are involved in right now. And this company, as an example, has gone ahead and tokenized gold that's sitting in vaults. So how do you activate it and get this idle gold so that it becomes working? So you get it working, right? You tokenize it. And in this particular case, this particular RWA mixes bots as well. So it goes ahead and has the bots trade this particular token that represents the gold, and that bot has a particular return that gives a percentage to the country whose gold it belongs to the company who owns the project, and then to the investor who's taking the chance. So everyone gets a third of what these bots produce. That tokenizes and monetizes that idle gold. Anything physical can turn from idle to money making by tokenizing it.
Okay, so you said some really, really important things there, and I want to kind of bridge these ideas because remember, a lot of our listeners, this is very foreign to them. So we're going to have to kind of step through. You've talked about gold now, and let's just stick with gold, but we've also talked about a franchise. We talked about different things that would be an asset. There's a difference, and we're going to kind of dig into this for a minute here. There's a difference in, for example, a gold-backed exchange-traded fund and a real-world asset. In the case of an ETF, an exchange-traded fund, this is basically a fund or a investment vehicle that has been broken up through shares, and it's traded on the exchange like a stock. That is essentially the same concept. We're fractionalizing gold. We're breaking it up into smaller chunks, and somebody can buy whatever number of shares they can afford. We're basically saying the same concept, but it's not on the stock exchange. We're taking those basic fractionalized ideas, we're turning it into a digital token like a cryptocurrency. It could trade, it does trade on a blockchain like a cryptocurrency. But you said something really fascinating. Nelson, you said something different I've never heard for any of these assets before. The gold came from a country, that's what I understood, and they're taking that gold, they're putting it into bots and trading algorithms that make money for the country and for third-party investors. Can you dig into that a little bit? That's kind of a lot of open loops there, but I want to bridge the gaps. There's similarities with it, like an ETF and the RWA, but the RWA is giving us more flexibility.
It really is. Nowadays, I'm going to back up a little bit. So the days of holding cryptocurrencies into a cold storage wallet when you're solving for safety are quickly going behind us. Nowadays, you want to get that cryptocurrency and either stake it, or you want to mine it, or you want to put it on RWA, or you want to put it on bots for them to trade. So it doesn't sit idle. Those days of having an asset like cryptocurrency sit idle are quickly going behind us. So in this particular case, for the gold that's sitting in vaults, it's sitting there idle, it's doing nothing. It would be almost like sitting on Bitcoin and just praying for it to go up, and it's sitting in your cold storage wallet doing nothing. We don't want to do that anymore, not with any of our assets. We want to put them to work. And in this case, the RWA is a great way of being able to put anything into work, to tokenizing it, so that I want you to imagine how equitable that is. Because nowadays, a single mom with children, a waiter, a regular guy like me could get into a big building, a mixed-use property, something that's a big concept, let's say, for very little amount of money by just getting that cryptocurrency and getting it and buying it. On top of that, if you combine one of these four items that I just suggested, staking, mining, RWA, and the bots themselves, you can combine those to even duplicate the returns that much more, right? So it isn't limited now to, for example, data centers. Data centers right now are being tokenized galore. If anyone's taken the time to build a layer one cryptocurrency, which just to define it, it's cryptocurrency with machines that are solving a math problem and churning out these cryptocurrencies. They're mining it every time they solve a math problem. They're sitting within metal boxes. It's cooling metal boxes, but they have a physical structure that's plugged into some sort of power so that they're sucking up energy. They're sitting on land. So it's a physical component upon which a layer two company is built. Now, that layer two company is typically digital. But my point is that these physical structures can now be tokenized into little tiny chunks and sold to the general public to produce more than just what these machines are mining. In addition to what they're already mining, now you tokenize that idea. That could be done to anything. It could be done to a producer of wine in a foreign country. It could be done to the maker of a baseball cap company. It could be done for anything. There's no limit to it. And that's what we're about to start doing en masse in America.
Yeah, so like you say, it can be done for anything that can be put into an LLC type of a structure or a corporate structure can be tokenized. And, one of the benefits for our listeners that are maybe still not quite grappling with it, yes, we can put it to work, but it's also the ease with which we can transfer. If you think through, you've done years worth of work in real estate. If we think through all the things that are required in the world of real estate. So if you want to buy a house, you have to go make an offer on it. The offer has to get accepted. You have to go through all the processes. Then you get to the title check and you go through all those hoops and hollers so that you can get to the closing office where you have attorneys there and they sign the paperwork and all that's done. That's the way that real estate's been done now for decades, right? But with an RWA, we could take that property, we put it into an LLC. We tokenize it, meaning we basically divide it into fractions. It could be whatever size we wanted it to be. Doesn't matter the value. You could sell all the tokens or a percentage of them. And we don't have to go through any of that legal paperwork. We don't have to go through any of the closing office. We literally could transfer ownership as simple as I can send you Bitcoin, or you could send me Ethereum, or any other cryptocurrency moving along the blockchain. And the ownership of that property, it transfers from one person to the next without all that hoopla. You say, well, how can it do that? Because what owns it is not the person. What owns it is that entity, the LLC, and what we're transferring is the LLC, or that we're transferring the ownership of that. That is an incredible efficiency that's being brought into, in this case, the real estate market. But then let's say that you Nelson, bought 100% of those tokens. Now you own it. And now you say, I want to liquidate a third of my house, but I don't want to liquidate all of it. You could put 30% of those tokens up for the free market to buy, but you're not having to go through contracts. You're not having to go through all sorts of paperwork. It's as simple as selling a little bit of your bag, so to speak. Did I explain that well?
You did. But even furthermore, once we get to that point of owning a little tiny chunk of whatever that company is or that physical building, why sell it? Why not just get a loan against it? It's got value. If you get a loan against it, it's tax-free. Isn't that a savvier way to go about it?
Well, I would agree with that. I'm just still trying to make sure that our listeners at home we're not skipping too far down the road for them, because I'm wanting them to understand that this is a transition, not just of a new asset class, but it is a complete overhaul of the financial system. If you just think through that example I gave with real estate just a moment ago, and we haven't even gotten into like smart contracts and, more advanced dynamics of this, but if you just think through how much that one concept could transform the real estate industry, there's an entire industry of closing brokers that may need to go bye-bye. Because what if all of our real estates became RWAs? There's an entire concept of, let's say somebody owns a house, they want to move. Right now, they have to go sell the house. What if they don't sell the house? What if they just simply put a new renter in it and they maintain their 20 or 30 or 40% equity stake? It transforms the opportunities. And like you say, now we've got all these tokens that have real value. What can be done with that? Well, that opens up an entire, just literally like a string of opportunities in the world of finance. I think this is the biggest concept to hit finance probably since ever. Ever. I was going to say since fractional reserve banking, but I'm fundamentally against it. But, that expanded our money supply. This expands for the small person the ability to do big finance without having big finance pockets. And that's an extraordinary opportunity.
So not only does it become something now equitable for anyone and everyone, it really fixes the massive inefficiencies that exist in real estate. All the litigiousness, all the paperwork, all the back and forth, the months and months of waiting before a person's actually able to physically get that property. It's impressive. So this is going to fix a bunch of inefficiencies. This is something super exciting. So
sorry, I didn't mean to cut you. Were you done?
No, well, I was going to add something else, but go ahead.
Well, it makes something that has been illiquid very liquid. Right now, somebody wants to sell a house, there's a process for that. If that house has been tokenized, or if an office building has been tokenized, or a commercial high rise or a strip mall or whatever, I mean, how many commercial properties do we see they're just sitting there that have had a for sale sign forever, or they've been months in the closing process? With tokenization, we can expedite that. It can be a matter of minutes that we transfer ownership.
Sure. And more importantly, though, we could find greater purpose for that particular commercial building, because now it can become a venue. It can become a hotel. It can be transformed into individual dwellings. There's so many things that could come of it, right? So now you're vending not just the building, but the event center, the purpose of that building, whatever it's going to be, right? So you build in the business into the sale of the property as well. And you cut it up into little chunks, and you let everyone allow it to make some level of profit, again, daily, weekly, monthly, whatever that may be. Yeah. Jeremy, what I was going to say is this. So I'm wildly interested in RWA, wildly interested. Why? Because I've seen it in action in foreign countries. I was in El Salvador. El Salvador went ahead and went on Bitcoin, I'm going to say 10 years ago or so, as their currency. And they're doing RWAs on everything. And so when I was there last year in November, I had a chance through a couple of friends out there to meet some folks that are doing RWA projects. And I had a chance to look at them. Now, before I go there, my definition of RWA is, let's assume that I want to bring a property to market, and it's going to be a hotel, or it's going to be a new home community with some condominiums mixed in. Typically, an RWA can fail when you only produce enough money for the construction of that property. And so someone has to wait until it's fully built out before they're eligible for a little chunk of that condo or the whole complex or whatever they may be, depending on the contract on the blockchain. But rather than going ahead and collecting the monies and using the full monies for the acquisition of the land and the purchase and the construction of the land of the property, and then the real estate either leasing out or selling of it, why not collect the monies collect 70% of it, and 30% of it you go ahead and use to pay that individual investor back from the very start, so that the land is acquired and the person's getting a payment on month 1, month 2, month 3. Then the construction begins, they continue to get paid. And so you're able to build everything out and continue paying them from day one, as opposed to having to wait for the entirety of the project to be completed. This way, not only are they paid the entire time, but at the end of the project, now they're owner of a percentage of that entire project. So it's win, 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 win. So back in El Salvador, I went ahead and asked these folks, I said, why are some of these buildings halfway built and not fully built out? And it's because of that same reason. They had an RWA, but they promised too much money on some of these projects to the would-be investors. They collected the sum and put it into construction, and something changed. There was a variable that changed: insurance, taxes, labor, whatever it may be. And suddenly they got halfway, but because they took the bulk of it and used it all for the construction, now they needed to go back and say, we need more. It doesn't work. Whatever you're going to bring in, use a percentage. I say 70%, because that leaves you a 30% window, not just to pay everyone back who took a chance with you from day one, but also it allows you that cushion that you might need should something change during that construction of that project. And I'm suggesting that 70% is used for the purchase of the land, the construction of the physical building, assuming that's what the RWA is, all the way down to giving commissions to that realtor to lease it out or to sell it out. So in this case, I saw a project over there that was a new home community with condominiums. It's a kind of a new town that they're making. And they said to me, the first thing we're going to do is the museums and the schools and all these commercial properties that had no purpose, but it would make them feel good. I said, why not hit housing first? It's what you need, especially in this area. Start with the condominiums, sell them to be able to have the money to produce the houses, sell them, and then go from there. Because without the people, you don't need a post office, you don't need a museum, and you don't need a school. So I got a chance to see some really interesting projects up close, some very successful ones, and some that were halfway done, some that promised too much to the end investor, and some that they just didn't have a cushion for the variables that could come for a construction project.
So it sounds like there's a lot of management opportunity for growth, especially in that particular area. I want you to share with our listeners, there's two concepts that I want to kind of bring together here. One, I know how I would answer this. I'm curious how you would say if Bob's sitting at home and he says, hey, what's the difference in a tokenized asset, whether it be real estate or anything else, and a share of ownership in that company? If we're just taking a LLC structure or a corporate structure and we're tokenizing it, how is that different than stock ownership?
There's paperwork, there's bureaucracy, there's litigiousness involved with the stock option of it. On the other side, the same way that everyone and anyone can participate on an exchange and buy a cryptocurrency, all you have to do is move your money to Coinbase, from Coinbase to whatever it is that you're buying. It's on the open market. You could buy as much of that hotel or that wine manufacturer or whatever it is as you want, and you own a percentage of it, and nobody needed anything from you other than the 3, 4, 5, 20 minutes it took to do that. And you did it in the privacy of your own home, you did it in your pajamas, you did it on your laptop.
Exactly. And that is it. That is the distinction here, is that the ease with which we can bring this stuff to market, the ease with which we can free up capital to flow smoothly. I'm not going to get into my whole model of how we could use an RWA to completely replace the mortgage industry, but we literally could replace the entire mortgage industry with RWAs and make it more friendly for renters to become owners, make it friendly for my 17-year-old son to be able to start investing and buying real estate right now, $50 at a time, start receiving rental income, $50 at a time, not a $500,000 investment at a time, without having to go out and get, new loans and new approvals and all this stuff. It just makes investing in big assets attainable for the little guy. And that's what I love about it. And it frees it up and makes it easier for the big guys too. I want you, now that we answered that, I want you to tell our listeners about going back to El Salvador. You had an amazing conversation there that you shared with me about tokenizing a soccer team. Can you share that concept with our listeners?
Yeah, and before I go there really quick, it's interesting and ironic and somewhat contradictory, Jeremy, because RWAs are moving quickly in the Middle East, in Asia, in Africa. They're moving very readily, Jeremy. There's not a lot of red tape. Here, it's still an SEC condition. So it isn't something you and I could just do like that, not a problem. No, it's still looked at as, whoa. You can't handle making that kind of money. Slow yourself down. Are you licensed? Are you insured? Are you accredited? Who are you, And so it's a bummer that we're still under those conditions.
Before we move on to the soccer team, I just have to address that. It's not just the RWAs. This is the world of crypto. And this is part of what President Trump has said, whether people love him or hate him. He's been very upfront saying if we don't get in front of this crypto machine, the United States is going to get left behind. What I've taught for years, I've taught options trading and stock trading. in the world of crypto, you can't do that in the United States. But outside, you go to Binance outside the United States, you open up an entire derivatives platform where we've got options on almost all of the major cryptos. We've got futures. We've got this whole new derivative called perpetual futures. We've got an incredible financial infrastructure that the United States citizens, people inside our borders, do not get to participate in, but 100% of the rest of the world gets to. And Americans don't understand how limited we've been. And you say, well, who's holding us back? It's the big guys on Wall Street. It's the big banks who are fighting right now as we're recording this. They're saying, oh, we don't want Coinbase to be able to offer yield on crypto that they're holding. Why? Because it's going to take away from the big banks. They've made their living paying the citizens 1%, 2%, 3% a year. And now we're looking at things with these RWAs and with the bots and some of the stuff out of these banks out of Europe or out of Dubai that we've been working with, where people can earn 0.5% a day. And people say that's not real, or is it? And it's just been behind the facade that they've kept the little guy out. So I had to address that. I want our listeners to realize what we're talking about. You haven't heard about it because they're trying to keep it from you. But just like, in 2009, 10, 11, they tried to squash Bitcoin and the rest of the world made Bitcoin live. Right now, they're trying to squash RWAs. They're trying to squash neobanking. They're trying to squash crypto derivatives. The rest of the world is thriving in this area, and it's inevitable. We've passed the point of no return. The rest of the world will make this live. We in the United States just have to rise up, let our Congress people know, let everybody know we want it. We want to be part of the new financial system.
Jeremy, we need to be. We need to be, because we're about to see what were considered third world countries and communist countries rise, because these governments are allowing their people access to returns that they're not conceivable in this paradigm, or from what was
the historical paradigm. Yeah,
that's right, and that's why even when you speak to an average a trader or a financial planner, a fiduciary, an attorney, especially if they've been at it for 20, 30 plus years, they'll always tell you, oh, that's a scam. It's not possible. Nelson, I can assure you, I've been doing this for a lifetime. I would have known about it by now. Someone would have taught me. My college, my professors, whatever. I'm licensed. You probably don't know that, but I'm licensed. None of that matters in this new world. An unlicensed regular person gets online, buys crypto, and they're buying a little chunk of a restaurant. They're buying a little chunk of a wood manufacturer for chairs. They're buying whatever they want. The challenge is that here in America, we're just disallowed that.
Right. And let's bring some clarity. You made a statement, you can get online and buy crypto and you're buying part of a restaurant. It would be if you bought the crypto that tokenized that restaurant. Just going and buying Ethereum or whatever doesn't buy that restaurant. And what we're disallowed in the United States right now is unfettered access to all of this. But to be fair and to be clear, there are opportunities right now. There's several companies, a handful, that are tokenizing real estate. There's a lot of Airbnbs that are getting tokenized. A lot of people who used to own 100% of the Airbnb are putting up 20, 30, 40% and tokenizing that and letting people buy into it. And it is coming. We are getting regulatory clarity. But like you mentioned a second ago, these third world countries, historically referred to as third world countries, are rising. And because we went there, let's go talk about that. We'll put the soccer team on hold. You just got back from Paris and you saw some extraordinary displays of wealth and emergence of what we would have historically called third world, underprivileged economies. And you came back with stories of 6-7 figures that are going in, buying into these RWAs, using these mechanisms, and it is lifting previously forgotten economies out of poverty, bringing them up to world standards. And frankly, within 2 or 3 years, they're going to be leading the economy. Tell us what you saw.
I had the chance in Paris. I met these gentlemen, these African gentlemen, dressed up, well-spoken, British accent. And one of them asked me, why are you in RWA for this particular project? It's the tokenization of gold specifically. And as I spoke to them, They asked me how much gold I had, how many ounces I had, and why I hadn't already run into this portion of the project. They looked at me and said, you do realize that your profit is given to you in gold. You earn gold. And ultimately, you're eligible for gold at 20 to 30% off of market value. They themselves were putting in $250,000 to millions of dollars in this particular direction, very confident, because in this case, they'd been in this project for a few years. So they'd already tested it out. And so they were eager for some of the products that this particular neobank was offering to what they call their partners. These gentlemen went back and said to me, in America, you still perceive Africa as a third world, torn, poor country. And we're not. We've got fine dining restaurants and pubs and just fine eateries and cafeterias and so forth. They made it sound European almost. And they said it'd be worthwhile for you, because I already told them about my real estate experience. It would behoove you, they said, for you to take a trip to Africa and check it out up close. They said, we mine gold out there, right? I said, I do. But they measure their wealth in ounces, in weight. It doesn't mean they don't transition that weight ultimately into other businesses or properties, but they go from profit right into metals that's in their possession that no one can take away. And it gave them a level of confidence that the average person doesn't have.
Yeah. Do you remember what country specifically they were from?
Ivory Coast. I don't, and I don't want to say, because then I don't want to misname a country.
That's all right. But the point is, and you make so many great points there. Number one, they're rising out of what historically the world would have defined as poverty. Number two, they're very much a cultured society where there's major society happening here. It's not like they're just all living in huts and, drinking captured rainwater in a bottle. No. And most importantly, they understand, and it's not just those people, but there's several cultures you and I've talked about that when you go and talk to them and you get outside of this United States bubble, they understand the value of intrinsic wealth measured in either gold, silver, or some sort of an intrinsic asset, not just these paper dollars that Americans love to hodl.
It's interesting. I was having a conversation today with a friend of mine, and we were talking about how is it that the paper, because we hoard it, we treat it like it's got value. And we were talking about how you make enough movies where there's bank robbers stealing paper notes and walking away with hefty bags full of them. You create conditions of war and recession and conditions of whatever, where suddenly the dollar needs to show up and save the day. And so it gives us this perception that, well, the dollar by definition has value because it's saving the day. We pay our taxes in dollars. So they're creating all this artificial demand within our brain as though the paper note has dollars. But in truth, you know this and I know this, the sooner we get out of that paper note, which has a high inflation rate, the better, because the longer we sit in it, whether it's in cash, in a box under our bed, or whether it's in a bank, we're losing money every single day we sit in it. We have to put it into something else, anything else, right? These guys are very, very, very conscious of that.
And that's really why, the nations that came together to try to form BRICS, BRICS, for those of you who may not know, Brazil, Russia, India, China, and South Africa. These countries came together to try to form an alternative to the Federal Reserve's SWIFT international banking cartel. I think a lot of what Donald Trump did with the Genius Act kind of undermined BRICS, but it really wouldn't take a lot for BRICS to rise again. Really, the distinction here is who's going to go to a gold standard. We've seen it happen in Zimbabwe. People don't realize that Zimbabwe, the current new Zim notes, are tied to the gold standard. They are actually backed by gold, by ounces of gold. Most people in America don't realize the Russian ruble, when they tried to, undermine the Russian economy, what did they do? They fixed their Russian rubles to gold. It not only stopped all inflation immediately, they have some of the cheapest prices in the world for things that you and I would have to pay a lot of money for. And most of the financial problems that we struggle with today would be fixed if the United States would just go to a gold standard, which opens up a totally different conversation. But let's just stick with that right there. I still think BRICS could rise. And I think all it would take is for them to issue some sort of a BRIC currency pegged to the value of gold with international acceptance. And even the work that the Genius Act did to stabilize the dollar would be undermined by that. What do you say to that?
I completely agree with you, but remember the following. The dollar, when it's unhinged and unpegged from something that has a limited amount of existence. I'm not saying we couldn't mine more gold, but it takes a while to get it out of the ground. It takes a while to dig it deep and so forth. But you attach a monetary system to gold, it limits your capacity to stretch and build and get loan upon loan. If America blew up and grew the way that it did, especially when it did so, it's because when it unhinged from gold, it was able to perpetuate absolute building like mass because you stretched that dollar to infinity. I'm not saying it's a realistic value of that note. It's not, because now that paper has the value, what I think it's worth a penny, less than a penny now, compared to what it was before it was unhinged from gold. What I am saying, though, is that it allows for a level of expansion that when you hinge a note to something physical, you have to go in a controlled, fully accountable manner.
Yeah. No, I agree with that completely. I've made this argument for years. I mean, theoretically, I'm a fan of the gold standard, but I've told people from an economic standpoint, the benefit of fiat currency, believe it or not, I can make the argument for that. You just did. It creates elasticity. We have infinite money supply. So how much can we go build? As much as the fractional reserve system can expand. But coming back to RWAs, here's the benefit of this. Once you take all of these assets that historically had to go through bank funding and had to go through all these complicated processes, if you take all those assets and you fractionalize them through some sort of a tokenization process, now suddenly all this money that's sitting on the sideline in private treasuries becomes available to invest in all these opportunities. You say, where does the elasticity come from? Here's where it comes from. The increase in Bitcoin, the increase in Ethereum, the increase in these hundreds of cryptos that are out there actually creates that monetary rise for wealth and for equity that can then be converted into these RWAs and into other assets. And so we take the pressure off this fiat currency that's about to break. And one of the things that's a hidden mechanism that the crypto world has created, they've created a way to offload some of that pressure. And we've got a way that now, all that can actually happen. The underwriting of that, the funding of that. But here's why the big banks hate it, because it takes them out of the middle. They've been printing money through credit cards and through every lending opportunity out there. The American people have gotten addicted to the ease with which they can get wealth. They think that this is the only way we can grow. But let me throw this one at you. What was our actual fastest growth rate in American history? You know the answer, right?
What, in the mid 50s? Right after you're saying right after gold decoupled from the dollar. Yeah.
No. The fastest growth rate in American history was right after the Civil War, the Gilded Era, the wealthiest time in American history in terms of real dollars, in terms of real wealth. We were pegged to the gold standard and we had no taxes.
Oh, that's right. Okay, good.
Don't tell me that the Federal Reserve has to exist. You would never say that. Don't tell me that fiat is good and that's the only reason we've grown. Don't tell me that taxes are good. Like, these are lies that they have fed to the American people. And if we go back and we look, all somebody has to do, have you ever gone and looked at a house built in 1890 that's still standing? Some of that architecture is extraordinary. To build that house today would cost $6-7 million. And there's entire neighborhoods of these houses.
It's true. I'll tell you, you're talking about the McKinley era, right? Is that when you're talking about?
Gilded Era, yeah. I mean, I guess McKinley, I'm not sure. I'm not as good on my presidents, but 1865 to 1910, 15, 20. Yeah.
So McKinley, Taft, all those guys during those moments, So it's interesting because, again, President Trump has a strategy. He's turning around to the banks and the financial institutions and he's saying, let's quit fleecing the individual America to run the country and fund the government. And let's do sovereign wealth funds and let's do tariffs, because that's what used to work in America before, and that's what ran it, and that's what we could do once again. And let's leave the average citizen alone. Let's let them be an individual. That's that whole conversation you and I have been having the whole time about decentralization. That's what it means. It's empowering the individual. It's building that single human to have self-sufficiency for the first time and not be so government dependent on programs and loans and debt and notes and all this stuff that buries us alive, right?
Yeah, absolutely. And what I love, I'm trying to figure out how we wrap this up. This is a tough episode to figure out how we conclude it. But, what I love is, if there's a message I want people to get from this episode, it's this. Number one, take heart. Like, there's so many good things happening. We are truly at the beginning of something extraordinary. It was a few episodes ago, 3 or 4. I kind of laid out this whole idea of the fourth turning, and we're coming into the first turning, which means we're at the beginning of another 80-year cycle. By the way, the Gilded Era was a first turning. That was exactly that cycle that ran through up into the Great Depression. We're at the beginning of one of those again. We're transitioning, and I think the pendulum has swung back. The last first turning, the pendulum swung all the way over here. We gave all this control to the Federal Reserve and all this centralization idea. The pendulum is swinging back. And I want our listeners at home to be encouraged. You might feel tight right now. You might feel like you can't ever get ahead. You might feel like you can't get into some of these assets. But the good news is the landscape is changing. In fact, in many ways, it's already changed, and you can start getting involved. And if you can't do it yet, it's very, very, very close. And don't feel overwhelmed. Don't feel intimidated. My encouragement is to just keep listening to us, listen to other podcasts and research and learn, expand your capacity. And 6 months from now, a year from now, 2 years from now, you're going to look back and say, wow, that was a big turning point, simply because you opened your mind to something different. So maybe that's how we landed this. You got something you want to add to that?
I just want to say, anyone who's struggling and having a hard time, the printing, the big print, as they call it, is coming no matter what happens. There's going to be an increase of the M2 money supply. In other words, there's going to be a lot of money printing at some point, and it's going to have to go somewhere. So we're going to see the rise of cryptocurrencies and precious metals and real estate and so forth. It's coming. So no matter what, if people are patient enough, it's coming. I just wanted to say that if they could follow along over on, whether it's on Trade Maestro or DeltaChainLabs.com, we're here to serve you. We're here to help anybody. We're here to ask questions at any point. So you're not alone. Never feel alone, you guys.
Absolutely. So thank you for mentioning that. Really quick, a little bit of a difference. If we were to say a difference between what we do, Delta Chain Labs, you're more of a community. Explain more of what you're doing, and then I'll tag on to that. But give a big picture understanding for people.
So we started as a cryptocurrency university. We call it an academy because we're not accredited, so we can't call ourselves a university, but that's what we are. We have over 130 classes. We have modules and quizzes. Really, we have well over a year worth of classroom instruction through AI for cryptocurrencies, digital assets, and for artificial intelligence. However, we tailored to what the market says. And right now, the need for the majority of people when they have a company or a concept or a project is they need a platform from where to launch. They need a platform from where to put their idea, where an entity can manage it for them. And that's us. Right now, we're bringing on a series of experts in their individual field, yourself included, Jeremy, where we're inviting you on and we're saying, build here with us, we'll help you, we'll manage, we'll perpetuate you, and you can commingle with all the other experts that are here. And in so doing, you grow your entity. We shop from one another. We get one another's projects that propel us and help us and move us along further. So it really becomes this convivial melting pot. And we call it an ecosystem today, right? So cryptocurrency is one side of it. We're going to bring in commercial real estate. We're going to bring in trading. We're going to bring in all sorts of businesses, from restaurants to the manufacturing of goods for homes, all kinds of things. Anyone who's got an idea and they've either been in their particular field for 10 years plus, and or they're an author, and or they've mastered, they're certified or licensed and whatever, we want to bring it to market, we want to bring it to the general public, and we want to shoulder their growth. That's what we want above all. So that's what we're bringing to market.
Fantastic. So it's a community. It is it's a hub is maybe a better term. It's almost like, Elon Musk talks about X being the town square. Well, what does every town need? It needs town commerce. And that's kind of what you're creating. It's the ecosystem where consumers can find different teachers, different opportunities, different expertise, and then branch out from there. And on the other side of it, business owners, expertise people can come and find people that they can connect with. And it's a community. It's a hub.
It really is. It really is.
Excellent. Yeah. I love it. And I am on there. I'm still getting some stuff uploaded and getting set up because it's a brand new concept and we're all moving through it together. But what I've been doing for years, most people that are listening probably know this, at Trade Maestro and my previous business before that, we've been teaching people how to make their own trading decisions. So if you've been leaving your money with a financial planner and you keep getting negative results and you can't figure out why every time the market goes down, you lose 30% of your portfolio, well, that's what I help you understand. I help you learn when to get in, when to get out, and how to protect yourself. And more importantly, save all those fees that you're paying to all those advisors who really don't care if they're making you money or not. No one's going to care about your money as much as you do. And of course, now we're into crypto and DeFi. We're helping baby boomers and Gen Xers who are a little uncomfortable with this digital sphere. That demographic, there's 70 million baby boomers and Gen Xers, Nelson. And this is a unique demographic because we were born in an analog era. We're transitioning. We'll end up passing away probably in the digital era. And that's uncomfortable for a lot of people. So we're helping people navigate that move. And that's what we're doing over at Trade Maestro. So thank you, everybody, for listening. Thank you for being here. Thank you, Nelson. Great conversation, as always. We'll have many more to come. Until next time, if you guys haven't liked and subscribed on YouTube at Think Rich Radio, we've got some other social outlets that are out there, more that are coming. So like and subscribe, follow wherever you are. And until next time, we wish you the best. Have a great day.